Hey everyone, welcome back to the channel. Today we're diving into Tilray Brands Inc., NASDAQ, ticker TLRY, one of the biggest names in cannabis, with a growing footprint in beverages and wellness too. You've probably noticed the stock's been on a wild ride lately, surging big in recent days. We'll break down what the company does, the latest developments, the stock's performance, and whether this rally feels justified or if it's running into overvaluation territory with plenty of risks. As always, this is just info, no investment advice here. Let's get into it. Tilray is a global player in cannabis and consumer packaged goods. They cultivate, process, and distribute medical and adult use cannabis, mainly in Canada, Europe, and internationally, while expanding in the US through hemp-derived products and craft beer brands like Sweetwater, Shock Top, and 10 Barrel. The company operates in four segments: cannabis, beverage, distribution, and wellness, including CBD from Manitoba Harvest. They're diversified beyond pure pot, with beer now a big revenue driver and THC beverages gaining traction in states where allowed. In the last few months of 2025, Tilray's made steady moves, launching premium vapes like Amped Live Resin in Canada, rolling out holiday guides, and completing a 1-for-10 reverse stock split in early December to tidy up the share structure. But the real fireworks started mid-December. Reports emerged that President Trump is considering an executive order to reclassify marijuana from Schedule 1 to Schedule 3. That sparked massive optimism, as it could ease tax burdens, open banking access, and pave the way for broader U.S. reform. Tilray's shares exploded, up over 70% in a week, with sessions jumping 30–44% on huge volume, pushing from lows around 7 to 8 post-split to highs near $14. Financially, Tilray posted around $821 million in annual revenue for 2025, up modestly, but they're still grappling with net losses in the billions due to scaling costs and past acquisitions. The beverage side is growing fast, and international cannabis remains strong, but profitability is elusive, margins are thin, and cash burn lingers despite diversification. Now, the stock. Post-split, TLRY is trading around the low to mid-teens as of mid-December, with a market cap over $1 billion. The recent surge has it up sharply short-term, but year-to-date it's volatile. Valuation-wise, it's at a low price to sales around 1.5 to 2x, which looks cheap compared to growth peers, especially if U.S. policy shifts unlock expansion. Analysts are mixed. Some buy ratings with targets implying upside, but others cautious, citing persistent losses and execution risks. The rally feels driven purely by policy hype, real if reclassification happens, potentially slashing effective taxes and boosting margins big time. But it's speculative. No order signed yet, timelines uncertain, and past reform teases have faded. Risks are plentiful. Heavy reliance on regulatory catalysts means a delay or watered-down change could tank sentiment fast. Competition is fierce, profitability's not here yet, dilution from financing is possible, and broader market volatility hits hard. Plus, even with reclassification, full federal legalization or banking reform isn't guaranteed soon. In summary, Tilray's surge is fueled by genuine policy excitement that could be a game-changer if it materializes, easing federal hurdles for an industry long starved for them. Fundamentals show diversification progress, but losses and execution challenges remain. The run-up prices in a lot of optimism. Whether it's justified depends on actual reform delivery. High reward potential, but loaded with volatility and downside if headlines disappoint. What do you make of the cannabis policy buzz? Real catalyst or more hype? Drop your thoughts below, like if this helped unpack the move, and subscribe for more on volatile sectors like this. Catch you next time. Stay informed.